Order filled.
All right, we got some audio now. Let's see here. So what I'm looking to do is just show a basic layout on the X platform. Kind of give you a rundown on kind of how I set my charts up and what I'm looking for, especially when trying to pass combines. So you'll see here, I take most of my trades off of the 1 minute chart. I do have other charts up for different time frames, but everything I execute is on that 1 minute. Let's see here. Okay, so if you got your X platform open, it's got TradingView integrated into the setup here. So if we were to look at a TradingView chart, this is actual TradingView, which is basically my map for executing all my trades. A few things you'll notice with the X platform, one in particular for me is the VWAP, which you'll see is this purple line here. That's your volume weighted average price. It appears I'm getting a gray screen. Let's see here. So as you set up your chart here, you've got your order block here. Yours may be different. It may show like time and sales and stuff will show up in a box like down in this area. Honestly, I don't use time and sales for much of anything. What you'll see here, this is your DOM. This is your depth of market. This is your actual bid and ask at any current price in the market. And so this will continue to rise up and down. course, this is the night session. This is going to come across as a much slower rate when you're watching that DOM. If you're trading during the daytime New York session, this is just spinning pretty crazy. A lot of people execute trades off the DOM. Typically for me, it's looking for a price target is when I'll use the DOM for specific prices. Certain prop firms and stuff that have consistency rules, you have to hit a certain profit, a certain amount of days. It's important to know exactly where your take profit's set at, just so you're not having to go overboard. So we'll look over here on the chart. You'll see the indicators. Go ahead and fire those up. Two biggest things that I keep on my chart, mainly the VWAP and the simple moving average, because I trade on the 2 or on the 1 minute. I've back tested for a long time. Best trades for me happen right off of the 200 MA. Now, if you were to change your time frame, 2 minute, 5 minute, 15 minute chart, it will change that moving average. And at different points of the day, different variables that comes into play, it can help you out. It just depends on how you end up teaching yourself how you're going to trade. But for me, the way futures moves so fast up and down, you want to be able to get your best entry possible. And I have found that this moving average is hands down one of my best indicators that I use on my chart. And here's a clean example of how we ran up, touched the 200, and then that was a sell-off. Now this was, let me see here, prior. Let's see. So we had opened up here at the 6 o'clock hour, and we had that push up right there to the 200. If you'd have taken a sell order off of that 200, you're essentially going to banked on 100 plus points. And not to say that's always the case. But for me, I feel like if you have the best entry possible, a lot of times during a session, it may not be the exact touch of the 200. Sometimes it's a push through and then a retest where it comes back down and touches it and then continues up. And it's important to also know, take kind of a general, you don't want to get a bias of the market, but you do want to understand that, market is full of algorithms and checks and balances. Particularly tonight, we had a bunch of earnings. Market opened up, we had a pull down, push up. It did push back up, but honestly, it has to hit that 200 to kind of balance itself out and then continue on back down. And you can go back and you can test this. This morning we had the New York Open and we came down here, we bounced around the 200, but we stayed above the VWAP. So that was a very important instance where you want to make sure, when you're watching the market, it's either going to be above the 200 in the VWAP or below. But more importantly, the 200 is good for your entries. Here's a good scenario of we pushed to the 200, sold back down. Now this blue line I have, that's a 100 EMA. I'll get into that later. But the reason I have the 100 is sometimes you get such a big spread between the 200 and VWAP that the 100, which today was a fine example, we just had nothing but a run up, but you had multiple entries here on the 100 where you had a bounce off. If you would have taken an entry there, knowing that if your stop is within reason, if the trade isn't there, it's not there. As long as you have your protection in and the stop is in place, you get stopped out. You're not going to win all of them, but for a good entry, you could have got here at this 825 price and essentially made about 50 points over the course of the next 30 minutes. But you can go back about every day. The 200 comes into play so much. Here's a break of the 200, but a test down to the VWAP and a continuation on. That was a great move right there. 397. I mean, 100 plus points on that move alone. You can go back and you'll just find multiple touches on the 200. So I find that best entries off the 200, or making sure that you are, above or below the 200 in the VWAP if you're looking for like a directional bias. There's a ton of different indicators that you can use, and you'll learn over time. The more you trade, the more you'll just find different styles that'll work for you that you like. But the important thing is to stay consistent, when you take a trade, what you're going to do. So we'll go back here to the X platform here. One major thing that is a flaw on this ProjectX. I like it because it's user friendly. It's got a great mobile version. People can get on there with a phone. I don't fully recommend trading from the phone, but I've made a lot of money trading from my phone because I'm not always at a computer. But it's important to know, exactly what you're doing and what times you're getting in and out of the market. Let me check something here real quick. So one thing you'll notice on X, it doesn't matter if you're on the desktop version or your phone. I always set my VWAPs as purple. Just done it for years. But when you open up a fresh log into X, the VWAP is never correct. It is always in just a different spot. And so you always have to grab your chart and you have to go back few minutes, few hours, it doesn't matter, because when you bring it back, generally, if it's the first time you've opened up the browser, this VWAP is going to move. So even though this isn't an integrated trading view chart, I still make sure that my actual real trading view is where I'm at. So here VWAP shows a price of 710.47. Back here I'm at 710.47. So then I know that which chart I'm trading off of, it is correct. I'm trying to look here. Let's see. Those are my two most important indicators, I would say, for every day. Again, to set those up, you're going to come to your indicators tab. Just search VWAP. It'll show up there. Make sure you star it, save it as one of your favorites in case you have to change it up. Let's see. And then go ahead for your moving average. Now, for the 200, I use the simple moving average, not the exponential. I find that I get better results with what I'm doing. With the simple moving average. So for TradingView on this X platform, the moving average is the simple. If you see down here, it'll say, your exponential moving average, but I stick to the SMA for my 200. And then for my other charts, which again, this is like my roadmap. This is basically where I place all my trades. I do have this light blue line that is my 100, and that is an EMA. And I have found that one versus the 100 SMA. And this just comes from just lots of back testing and playing on the charts for a long time to find, what works for me. And mainly the biggest reason I added that was just for days like today, where we were just so far away from the 200 here. And the VWAP, VWAP stayed down here the whole time. So what happens with the VWAP, every time that the session closes at 5 o'clock, VWAP will automatically start out at the beginning of the session open at 6. That is different from the 200. The 200 will continue. The 200 continues at a rate every single day, the same thing. And what I use that for, especially, I love trading the night session from 6 to 8 a lot of times, because I have things like, how far am I from the 200? The 200 has to come into play at some point for a reset. So I take that into consideration every single night. Is, where's the 200 at? How far away are we from it? Chances are, before we continue in a direction up or down, it's got to smack that 200 just to balance itself out. So you'll find another big indicator people use is going to be like your volume or volume profiles. I find the more that I play around with too many indicators, it just gets confusing. Let me look here. All right, so once you get your indicators set up, placed on the chart, I've got this blue one on here. It's just it's a simple moving average set at 9. I never use it. It just every once in a blue moon. A lot of people will put a 9 and a 20 or 21 on there. And it does help with scalps. I do have another chart up on a 2-minute that I watch daily, and it's got, for the EMAs, it's got a 9 and 21. So I'll show you here. So this is a 2-minute time frame. You have the 9 and 21, which are these two lines here. Sometimes if I'm looking to scalp a trade or get into something and I'm not 100% certain, what the market's doing, you can always find a decent entry, like we've had in this sell down here. We get these pops up to this 21 here, great opportunities for a short. This candle here shot through the 21, but the body of the candle actually closed below the 21, which is pretty much a sell confirmation, and we're going to continue to sell down, which we did. A lot of people use this. This is honestly a fairly solid strategy if you're just looking to scalp a few points, knowing that if you clearly break below it, then the trade's going to reverse on you. And you can go back and you can backtest the same thing. This is during the New York session. You had plenty of opportunities where it came down here and touched the 21. You got a bounce. Here it broke through, but because of this hammer candle, that's a buy sign right there. So you wouldn't have wanted to gone short somewhere below, but you did get a continuation up from that one. And as you play with it, like you go back here to your on your X, you can come here and you can change your chart layout. If I can find exactly, but you can put 2, 3, 4 charts on, however many you want to. Set up however you want to trade. But for me, the biggest thing with trading is finding a good setup, catching your 20 to 30 points with one contract, making a few $100s, and then just being done. The worst thing with trading is when you get in and you catch a good trade, and then you just end up over trading. You'll make some, you'll lose some. But to stay long in the game, Make your money and get out. That's the key. All right, so going back to combines, evals, every prop firm calls it something different. I mean, Apex calls them evals and PAs. Top Step calls their test essentially, the combine. And then their funded account would be an XFA. But if you're around the prop firms enough, you'll just realize which one's which. But they're all essentially, you pay to take their test to play. If you pass, then you become a funded trader. So for me, combines and evals are just a hurdle in my way. It just slows me up. So you want to get through them as fast as you can. But when you're learning to trade, you also don't want to be throwing a bunch of money at it, trying to pass them. So that's the nice thing about Top Step X here, which if you just open your X platform, your practice account will not be enabled. So if you were to log into your Top Step dashboard, it used to be you could just activate it on the old dashboard. There's no problem. But if you go to your Top Step dashboard, along the left column, you're going to see accounts. You scroll down, touch the accounts tab, and up at the top left, it'll say add-ons. And then once you click on that, you can now enable a practice account, which I think you got to subscribe to it or however they set that up. But once you subscribe to it, it will show up on your X platform. And it'll be blue. So that way you'll know you're not in any kind of a live account. And that's essentially what they call a $150,000, which it's not. You get $4,500 of drawdown. So basically it gives you an account to practice with, test some strategies, do whatever with, but you get $4,500 of drawdown before that account's blown. Then you just have to go back in your dashboard and reset it. Like so this one's one I just play with when nothing else is going on. There's $56,000 of profit in there, but it's just play money. So something to focus on, especially starting out, if it's your first combines. The NASDAQ symbol is NQ. You have the S&P 500, ES. An NQ contract, which is just one. So the price here at 25,636, that number of 25 means absolutely nothing. The price of the contract is just going to be, how many points it moves. So for every point that, this price moves up, down, 24, 25, whatever, you got $20 up or down on that one contract. When you're wanting to pass combines, you're a little more aggressive. Typically, I trade 2 to 3 minis, which is a full size. But if you're starting out, don't recommend it at all because you got to be a little aggressive, but you can also get your face ripped off on if you were looking for a triple bottom here and you went long and all of a sudden market just decided to drop 30, 40 points, you'd be nursing the loss. So to mitigate that risk, you come over here and you'll go with micros, which is just an M in front of the NQ. And here you've got micro NASDAQ. And what micros offers is one contract of a micro versus a mini is 1/10 of the price. So instead of catching every move as, $20, you get 1/10 of that.
Order filled.
So like here, just place an order for just one micro.
Order filled.
So if you can spend some time on the practice account, understanding how to basically place an order, I use the buy and sell buttons right here. What's nice about the X platform is
order filled.
Like here. So we buy one, we go long. You can come over here and you can just grab where your order was taken and you can just slide your take profit up. And as it slides up, it gives you the P&L if you hit that area. Same as a loss. You can just grab that, pull it down, and set a stop in place.
I need more information. What word or phrase would you like to use instead of stopping place?
Let me see here. I'll try the chat now. All right, trying to work out some technical difficulties, but I live in the sticks with limited internet, so I get what I get. So when you place an order here, let me close this out.
Order filled.
So again, we're on MNQ, trading micros. When you
Order
buy
filled.
one and place an order, you come over here and just hold the mouse down and you can push it up towards your take profit is. And you can also pull it down to set your stop loss. And it gives you the amount. A lot of different platforms have different variations of this. This is definitely one of the quickest. Like if I'm passing evals, let's go in this case
Order
where I
filled.
switch back over to full size NQ. When I see a setup happening, whether it's, catching a small trend or, I'm only looking to hit 20, 30, 40 points. The way I set that up, and I'm not recommending this for people that are just starting out. This is what I do because combines are just in my way. Is I'll come over here to the settings. And the first thing I do is I come in here to the risk settings. And the biggest thing to understand, TopSip has a 50% consistency rule. So your total profit, you got to make $3,000, but your consistency every day has to be 50% of that. So for me, simplest thing to do is I start a new combine. I come over here, go to my PDPT, and I will set it at 1540. Again, if you're starting out, the goal isn't to bang out $1,500 the first couple days, because you're going to have to put on some more risk to do that. And until you get a grasp on how it works, you don't want to end up blowing a bunch of combines in the learning process. But what you do is, or what I do, I set this 1540, come down here, and I just liquidate. I don't liquidate and block because too many times with slippage, you get a big candle, big move, and the bid and the ask will spread out too far. And the next thing you know, you're like 1450 or something. You didn't hit that 1500 mark. But at 1540, typically I always get a fill somewhere around 1520, 1530. And that's all you need for the day. And then the next day I get back in, do the same thing. That PDPT sitting at 1540 just to liquidate. And then I go to work. So when you set that, save it, it'll automatically be set up on your account. So in this case, I'm just throwing it out there. You see this obvious trend line that we got pushing here. You're going to come across so many people that are going to talk bad or down talk, trend lines, this and that. The way the markets work with the algorithms, if you don't use a trend line of some sort, you're just doing a disservice. You look at yesterday here, we had this big run up. Typically on a trend line, so if you want to draw them over here on the trading view chart, just come over here. You got trend lines, extended lines. You come down here and look at the push up we had from this morning. Anywhere along that trend line, you could have taken an entry. Again, you're only looking, to get your 20, 25 points for the day. Why not take some of the easiest ones you could get? You wake up 7 o'clock in the morning, you've got 2 touches here. You're coming down for a third touch. We're probably going to push up towards that VWAP, the 200. So a third touch right there, I'd have been extremely confident going long, at the 450 range. And you'd only been in that trade for 10, 15 minutes and you were already up 80 points. I mean, so you can't tell me, if you don't have, ignore all the hate you'll hear on the internet about trend lines and who promotes them and all that. It's all just an extra tool, in your arsenal that helps you just take a good entry or a good trade. Same thing is like during the day when you're in a range, you can draw your boxes, your lines, your trends, however you want to do that. And you can just play in that range up or down, knowing that if you're going to blow out of the top of that box, have a stop in place. Same as, coming down. You can use all the extra tools. Let me see here. I haven't played enough on TradingView lately. Find my boxes. Oh, here we go. So you can draw You can draw a box here. Clearly, you've got a bottom. You got multiple touches here. 1, 2, 3, 4. Kind of still playing around that 200 moving average. But if you were just to take, some trades inside and out of this box, knowing that if you get a big push out, have your stops in place. But you had the opportunity here for 1, 2, 3, 4, 5, 6, 7. Half a dozen chances to scalp 20 or 30 points off of a box like that. Even in the case of yesterday morning, or I guess it was this morning, this trend line that started early still came into play the entire rest of the day. And whether you put your trend lines on the bottom touches of the wicks, or the body themselves, you're just trying to stay in that general direction. Like here, when we had the market opened at 9:30, you just had extreme manipulation. Markets were coming down. Honestly, they were kind of resetting around the 200, close to VWAP. But then you had a continuation up, and if you just stuck with that extended line, you had, again, multiple opportunities. A touch there, touch there. Finally, it broke that trend line up here at, 3 o'clock. And you had a big sell-off right into the close. About 150 points or more. So just know you have these drawing tools and stuff available, for your trend lines. But back to doing combines here. Let me take some of this stuff off. Actually, I'm going to leave this box into play here because we had so much movement around it. I'd be curious if this becomes a supply zone, possibly, if we retrace down into this area. And that's what the market does. The market is basically looking for areas where the most amount of buyers and liquidity are sitting. You'll see here on the open. So this line right here, this was the close at 5 o'clock, the open up at 6. I find my best trades happen right then because I treat this as like an opening range breakout. That first 1 minute candle. The following candles are either going to push above or below that. And you can back test this. You can go back and see, but some of the most simplest trades are where that first 1 minute candle sits. And if the second and third candles continue up or below. So in the case of this, we had a sell down at the bottom of that candle. So if you were to put a sell candle or a sell order in at 7:38, taking you just a few minutes, and you would have caught 30, 35 points on that trade. That happens most nights. I've had a lot of success in that 6 to 8 o'clock window, because that is essentially, that's Asia's pre-market, 6 to 8. I used to spend so much time on the charts drawing out all the major levels of where liquidity would sit, tops of areas, bottoms of areas. Chart would be just lined up with lines everywhere. And I will still do that from time to time, but I found it easier if I let TradingView, not on the X platform, but the actual TradingView itself. There's so many different indicators out there that do it all for you. And I use the Spaceman BTC because it matched up with so many more of my lines I used to draw. And it took a lot of the work out for me. So the more you delve into trading, if you're going to actually make a side hustle or career out of it, it's definitely worth putting TradingView into your monthly subscriptions. You'll find that between the indicators and stuff, to me, again, I use this as my roadmap. I take all my trades based off of what TradingView, what my chart's telling me there. So it's actually this 1 minute chart here. I've got indicators for the first 15 minutes. Opening range breakout shows up every single day. I like it because, like in this case, this was the London session last night coming into the New York session. This was the opening range breakout. So that is the first 15 minutes from 9:30 to 9:45. You go online, social media, like this is the indicator that everybody places their trades on every day. And before I would use these, I would just wait for a 15-minute candle to form. So I'll just show you here real quick. So this right here, this is the 9:30 open. Another indicator I have is this shows the background boxes. They show my different time frames. It's like Asia opens up at 8 o'clock. So from here, from 6 to 8, Asia pre-market, there's nothing, but you'll have the actual Asia open at 8 o'clock. And then at 3 o'clock, London open, which will be in yellow. Goes into New York's open, which is all green. You'll have that first hour, a little shade, a little different. But in the case of an opening range breakout, there's a lot of different indicators on the actual TradingView that'll show automatically. So it used to be you take this candle right here. This is your 15-minute candle. When it is fully finished, you mark the top and the bottom of that candle. And you can use a fib tool or something, but you can also mark the 50% line right here. So what a lot of traders will do is look for, in this case, this was the top of that opening range breakout. The next 15-minute candle, if you broke down to like a 1 minute time frame, you will see that it bounced around and then pushed up towards the top of that area, and then you had a run up. But if you leave these indicators on from like prior day or prior days, it does kind of give you an idea where volume sits. So if we come back into today's session, not so much on the 15, but if you look at a 1 minute, so here's a 1 minute chart from today. Even though we had our own 15-minute range that was set down here, it was obvious that all the volume sitting in yesterday's orb came into play as well. So here on the bottom of yesterday's orb, we pushed through that, chopped a bit around it, actually ran up towards that middle range, but this middle range stayed on, couldn't really break out of it until you had this kind of reset down here at the 100 EMA. Pushed up, got up here to the top of the orb. You'll see that's basically where this first retest was. You got to pull back down, which this dotted line actually would have been yesterday's close. So that was another indicator that I keep on my chart. And you'll see we pushed through, came back down, basically touched yesterday's close, and then we had this continuation up through that green orb high, pushing on up. So let's go back here on X. So ideally, I could put the 100 back on here. moving average exponential. Go ahead and star that one. Add it to the favorites. You come over here, this little drop-down menu. One thing also is this link. When you look over here at your order boxes and your DOM, this link here is this little blue color. You want to make sure that you have that added to your indicators, which would be this color link. I'm not sure on a fresh ProjectX account if it has it or not. But go to the indicators, grab the color link, star it, save it as your favorite, and make sure it's added to here. Because what happens is you could be changing charts and not realize that this blue and this blue, they're not connected right. And so you're going to try to place an order on your chart and it doesn't show up on the DOM, or you're going to place an order here and you're going to be under different contracts. So definitely go into your settings, add that link on there so that way you can easily fix a problem if it happens. But in this case, let's see, I just added the exponential moving average. Go over here to your settings. I'm switching that to the 100. And might as well have it on this chart too. Like I said, pretty much every day, I don't use X other than, I could just have the DOM sitting here to place my orders. Because all of my trades are executed off of what I see on this chart here. This is basically my map every day that tells me what to do, what I'm going to do, and how I'm going to trade. Everything else is just a tool to execute your orders. All right, what we got going on here? All right. Trying to figure out these settings so it won't glitch out so bad, but yeah, I've got very low upload speed. Let me check something here. Right, NQ Menace. The exponential definitely is more geared towards the recent candles, for sure. And it's one of those things, like if I'm looking long term, if you're swing trading or something, you can put these indicators on, a much larger time frame and find potential good trades. If you're a swing trader for, Q options or something, pull up that chart on NQ futures and look where that 200 comes into play on, a larger time frame. Kick out to an hour. Look out here where the 200 MA comes into play. Pretty good example of a break through the 200 and a great retest on a 1 hour time frame. If you'd have been set here, this would have been in the New York session, but if you were looking out weekly put options, you'd have caught 600 points right there. Been a pretty good move on an options play. Let me see. All right. So going back to some trading basics. Big thing that I look for. It's been a lot tougher lately because of the current market conditions. When you're testing all-time highs month after month after month, it is honestly for me the hardest trading because I have spent all of my time. I focus on trading pivot points, reversals. You catch a good area where volume hits double tops and stuff, and you generally will get a pullback in the opposite direction. And to me, that's when trading is the easiest. But when the market goes on a tear like this, let's kick out to a 15-minute time frame here. And you get these stretches where the market will have a little bit of consolidation and then just run up day after day after day after day after day. It's like, okay, what point is there a top, and will we get any kind of a little bit of a correction? And immediately, if you look at this case right here, from 269, you had just a 500, 600, 700 point drop that, immediately just gets bought right back up, sometimes within that day. But trading futures, average day market moves 200 to 400 points on average. All you're trying to do is find a decent setup to catch 20 to 30 points of that. And the nice thing about futures, whether you're trading prop firms or you have multiple personal accounts, let's say you have $50,000 and you put it in your personal account and you want to make $1,000 a day. You're going to have to size up to where you're taking trades with more contracts than you need to. And what you'll end up doing is you're putting a lot more risk on in the event that, you're in a trade up here and you get these death candles and you can lose, money fast. You could also gain. That's where copy trading comes in to such a good realm of mitigating and spreading out that risk. Is you're going to make that same $1,000 a day, but if you had 5 personal accounts that were linked to a copy trader, I use Replicanto. If you had 5 accounts in there and your goal is $1,000 a day, you just got to find $200 on one trade, copied across 5, and you've made your $1,000. But instead of having to go in heavy, you switch to micros, and you can take a 2 or 3 micro, trade to make that $200, and not have to sit there and be sweating it, worried that you're gonna get your face ripped off on NASDAQ has what I call death candles. You'll get 100 points get ripped off in a matter of seconds. And if you're not paying attention or don't have your stops in play, like here, we had this massive sell-off tonight. We broke that 700 level, dropped down 50 points, roughly, but was bought right back up. Why sit through that risk of a 50 point, if you were hoping to get long, possibly on a triple touch here, which if it's 3 times trying to touch this level, chances are they're going to try to break it and grab that liquidity. But if you were to have to hold through 50 points of drawdown, it'd been a lot easier to do if you only had 2 contracts of, 2 micros instead of a full size mini. Instead of $1,000 in drawdown, you're only sitting through a couple $100. It's a lot easier to manage. But the main goal is, again, trying to grab your 20 or 30 points, making your few $100 and being done for the day. But going back to how I look at a daily session, before we kept pushing for these all-time highs, I always say 3.5 times a week, which puts that average wherever you want to stick it. The market's going to open up at the night session. Asia's going to have a high and a low point. This one's a little different because we've been trending down. But you'll have an Asia high and low. London opens up, and London is going to want to try to take out both the low and the high side of Asia. And then you go into New York, and New York is going to want to try to look for liquidity above both sessions. It's nice with this indicator that it has the boxes, especially like if you're in a trade for the day. Like in this case, clearly Asia opened up at the low of the session at 3 a.m. London opens up here. And if you zoom in, you will see how close London could not take out that bottom. And it was just nothing but buyers. And instead of coming down to just grab that little bit of balance, it just ran up and ran up and ran up and ran up into the New York Open. And what happens at the New York Open here? This is your 8:30 to 9:30 pre-market. You know, we had some stuff going on. But as soon as New York opened, what do? We sold straight down all the way to where we just, the bottom of this wick right here, just went below the bottom of that Asia. And from there, you get a continuation up. Going back to my 3.5 days a week, it hasn't been as favorable, especially this fall, probably since August, but you basically want to spend the day, you know, see what Asia does, see what London has done to Asia. And then if you're going into trade New York, you're going to find your direction based on where the bottoms of those areas are at. Here's another good example. You had Asia opened. We had a continuation up. Actually, this blue trend line that you see here, this is actually a line I drew months ago. And depending on your trend lines, you know, you can have this chart that's all drawn up, and it can be very confusing if you have too many lines. But if you had a few good clean touches from a few months ago on your trend lines, you'd be surprised at how 6 months down the road, that'll come back into play at some point. That's just how the algorithm, you know, makes those wicks up and down, you know, those checks and balances. And it may look like it's nothing important, but obviously this line that I put on here months ago came into play and actually presented some favorable touches, some sell points off of it. But again, when I'm looking at a session here, you're going to look to see what Asia's done from 8 o'clock. Sometimes, like most nights, I start at 6 o'clock because sometimes the Asia range, it's like, well, if London decides to push up or down out of the range, where's it going to go? Look for this 6 to 8 o'clock in the evening window because that could be where you're going to find your levels at. But in this case here, we had Asia opened. London opened, pushed above it. Came down here to the VWAP, challenged some. New York opens, and it took out the top side. But it took all the way until 2:40 in the afternoon, which I think, I don't know, it could have been news-driven. Chances are that was probably, what was Wednesday, a Fed day. Either way, you know, news took out that low by a lot and then bought it right back up. But that's generally how I go into my trading days, is looking for what Asia, you know, has done, London, and a lot of guys on social media will teach that too, looking for, you know, the draws on liquidity on up or down. But it's important to know it, because there's going to be so many times when you're trading that you're going to see that, oh, okay, well, I'm testing the bottom. You know, I'm in the New York session, but I'm testing the bottoms of these lows. It's a good spot to take a take profit. You know, put an order somewhere down in there, knowing that chances are we're going to come down there and we're going to grab that liquidity. May not go past it. So, like in a scenario where I'm looking to take profit, if I'm not sliding my stop in profit as I'm in profit going down, never assume it's going to break that low. So always make sure, if you're definitely going to get out of a trade, to get out just 5-10 points above that, just to make sure your order gets filled. But that'll just come with time as you're navigating the markets more and more. Let's go back to current day. So we're looking at the Asia Open right here. I know on my X, I must have deleted. Nope, there it is. So I've got this box already left, giving you the example of a range, you know, trying to scalp in and out of a range. Looking at this chart and then just glancing really fast back here at my trading view chart, that same range, which is here, is essentially where the 15-minute orb kind of played this morning. So market-wise, you know, we had a bunch of earnings, some good, some bad. Overall, I feel like we were a little short biased from the news. So I don't see like us getting a continuation or a push up. Right here was the daily open at 738. We came down here during Asia, the 8 o'clock open, which is the blue box. We've kind of stayed with this selling pressure down. Personally, I feel we could continue down lower, possibly into this below the 600 range before you get a continuation up. But again, if I'm looking to take a trade, this is kind of your no man's land. You could get a push from this 44 range down to test this bottom again. But if my bias was already kind of short, I'd have been looking for an entry right up here off of one of these, you know. This was a solid touch off the EMA. You had another push back up towards it. So if you were trying to short here at 679, you'd have known that your stop would have been, you know, a push up into the next area. But again, you had a trend line. You got a pretty good. And when you're drawing trend lines too, take this into effect that, you know, nothing's going to be perfect on your touches. But right here, if you would have drawn your trend line after this third touch right here, knowing that this one right here, that's just a little bit of manipulation. Because the market sees the trend lines too, and they will try to use them in their advantage. So here, you know, if they had stops in place, that is just market manipulation blowing up there. But you had a nice touch here. So if you just would have drawn your trend line, had it extended out, it would have painted a good picture too on potentially a couple other touches. And again, you're not looking for home runs. You're looking for base hits. A couple $100, you know, a day keeps what away? Your bills. Multiply that times 5. It's $1,000 a day. You can consistently do $200 a day with the same risks, same trades, same setups. You know, let's say you get into a trade and you're going for a 1-to-1 risk reward. So you're willing to make $200, but you're also willing to lose $200. On a probable setup, you know, trend line touches, you know, just a good entry, you're going to have a much higher win rate at just making that one-on-one, you know, one-for-one $200 than if you're going to try to go in and risk $200 to make 5 times that on one trade, that 1,000. You know, you're going to end up hitting that at a, let's say, 15-20% chance. And in reality, the prop firms, they make money on the gamblers, on the YOLOers, people of that nature. That's how they pay their bills. But when they're looking for live traders, they're not looking for the guy that's risking, you know, a 7-to-1 or, you know, even a 5-to-1 all the time. If you are a consistent trader, even if it's a 1-to-1, you're going to make 200 but lose 200 on your risk. If that puts you at like an 80% win rate and you stack up the green days, that's what the prop firms like to see is consistency. They want to see those green days stack up, because if you're going to go join their firm and trade live money, they don't want you YOLOing those accounts, and people do that. But again, when you go live with a prop firm, it's the same as the tax benefits aren't as good, but you're going to essentially add that firm to all these other firms that you're trading. And if you're only making a couple $100 a day off of, that account with that firm, big whoop. The goal is to have 5 or 10 firms making $200 a day on each firm. And essentially, if you're copy trading a few at a time or all of them at the same time, you're going to make $1,000 to $2,000 a day. That's $5,000 to $10,000 a week. That's a pretty good income in America, I would say, or anywhere in the world. So another thing you want to watch for formations. I got to find a better example. Well, I mean, tonight could be possible. As you start researching and studying chart patterns, you're going to learn all sorts of different flags, different candlestick patterns. One that I like to use to find a couple good scalps is just a simple flag. So in this case, we had an obvious touchdown here. We have this down here. This wedge pattern right here. You will find a lot of times during the day when the market is just kind of on cruise control. Some people call it chop. Some people call it whatever. But a lot of times, like when the market gets into this slow range area, it forms this wedge, and the market is going to try to break out of it at some point to the top or the bottom. So as the wedge continues on and it gets tighter and tighter and tighter, you will have a lot less chance of scalping some money. But for me, some of my best trading comes from scenarios like this. It's kind of hard in Asia because we're in a small range. But if you take the New York session, let me find a good example. You'll find them all the time when you're actually in the market trading it in the day. Oh, here's one. So whether you drew a trend line here, you had more touches down here. You had 1, 2. You had after this candle formed, you had a trend line right here. You came up and touched this area. That was at 0.72. You had a sell down to the bottom of this wedge, which broke through. But just to go from this point, off of this third touch, from the 72, I mean, that's a 70-point move. Just trading micros, a small wedge like that, to me, I find a wedge pattern form. I can take multiple scalps in there. I mean, I can scalp out $1,500, $2,000 on just doing that alone, trading a full size, mini. But I also find it as a good area to grab, if you're trading micros and you're looking for just that one. Because some people will sit there and they will look for one specific setup, whether it's a certain flag pattern, whether it is a break and retest of whatever indicator strategy they're using, or, some people are breakout traders. They're looking for a low of a session and they want it to break this low. They're waiting for that short. As long as they are consistent with their same strategy all the time and they're comfortable with that, that's great. But me, I'm more of a fluid, active trader. I want as many things in my arsenal to help me get into the markets and make an educated trade, when it's available to me. Not everybody's going to sit at every hour of the day and stare at the charts and find like the best setups. So for me, I look at the charts, if I recognize some patterns, hey, if it allows me to get into a high probability setup and grab my 20, 30 points, I'll use it. Some people sit there and they'll see a wedge form. They're like, oh, I can't trade this. Why not? It's a very easy setup to grab your scalp, especially in today's market. You'll just look back at, let's see how far we can do here. Oh, wow, there's a bunch of lines. Well, as you can see here, these were all levels. There's several hundred of points, in between these levels. But when I was actually trading, before I just put the indicators on, they were such critical areas that they were very important to have on the chart. But what I'm doing, I'm just going back, back to COVID-19, 2020, 2021. NASDAQ was trading around 10,000 and below. I mean, we were down just at 4,000 in 2015. It's crazy how explosive the market has been. I mean, we're to levels that are just unheard of. And it does make me fearful at the point that we decide to correct, how hard it's going to come back down. Because no market just goes up and continues to go up forever. There will always be a balance that has to come into play. Whether it happens really fast or it happens over the course of 5-10 years. You just never know. But there will come a point where we will not just be shooting straight up all the time. I mean, it's crazy. But consider the fact that, if you're still trading around, the 10,000 mark, what's an average day going to move? 30, 40 points? 100 points being a massive day. I mean, this section here went from 626. Where are we at? 95.27. So there's 3,000 points over the course of several months. But on an average day, again, you're not moving that much to where if you were trading micros in that kind of a market, you'd probably go just bored out of your mind because your P&L would be so low that you would be trading a full-size minis, even multiples, 2, 3, 4, 5, to catch a good move. But now that the market's up here at 25, pushing 26,000, it's a whole different scenario because all of your little glitches in the market, every little burp that comes along, I mean, it's 50 points. You get into the New York session and it's full of 100-point pushes, 50-point candles. And if you're sized up too heavy, you're going to get wrecked. And that's another thing when I start going over some swing trades. I treat the 200 as my best entry model. Look at it as if you are I can see I'm glitching again. All right. Let's see if we're still working. And I can see I keep getting the gray screen up on the TV. It's in the browser settings. All right, what's going on here? Just a second here. Trying to adjust this bit right here. Again, my upload speeds are very minimal out here in the sticks. We're working on a fix for that. All right, let's see if this is any better. So anyhow, going back to why I like the 200, especially if I'm going to sit in a trade for a long time. I reference into like when I buy a house or I buy a car, you don't make your money on the actual sell of the vehicle. The money is made on the purchase. And if you're able to buy a house or a car at such a value, under, market value, that's where your money is made. If you have to sell the house, you have to liquidate, it doesn't matter. If you bought it cheaper than the best price possible, that's where your money's made. And that's how I feel the 200 helps when you're looking for some good trades, the best price possible. And if you go back and you back test, you'll find that taking an entry off of that 200 is very solid. This scenario was good because you had a break and a retest of the 100 continuation up. And that's the cool thing about futures, especially on the X platform, is, when you're in a trade.
Order filled.
Let's go into this instant here. We'll just, we're in a full size. Let's say you take profits all the way up here at the top of this channel. Again, this is a full size contract. That's a couple hundred points. That's $4,000. But let's say, this trade is moving, up towards that area in profit. You can just grab your stop that's in place down here as you pulled it down. And you can just continue to slide that up behind where it's currently at, and you can trail it That way, if it happens to pull back against you, you will lock in that profit. But you'll find also as you're playing with it, sometimes having that trailing stop, if it's too close, you can get a wick that'll just come down and close your order out and you won't get that continuation. So it'll just come with, time and experience and, where your entries are at based on where you want to put those stops in place. But another thing with micros too, instead of doing, one full size
Order
mini,
filled.
which will close us out. This is something I have a very hard problem doing, and that is scaling out of a position. So in this case, we'll do 10 micros here. I really wouldn't be going long here for continuation up. It's just an example. I feel more likely we're going to hit this 200 in the VWAP. It's more of a reset, probably for some continuation down. But
Order
let's say, you're trading with micros. So 10 micros is equivalent to 1 mini of the NQ. It's nice if you're looking to hold a trade for a long time to be able to set points of scaling out. So you can, have your full take profit, back here towards the top. But along the way, come down here and you can take profit, lock in profit and scale out, sell a couple contracts, moves up to the next level, sell a couple contracts, and then let them runners, whatever few contracts you have left, continue on. That is something personally I have a horrible time doing, because I'm like, if the trade's there, the trade's there. So if I'm going to take this trade with 10 contracts and I'm anticipating it at this level, I'm going to hold it for that. But there's been a lot of times where I would be halfway there, and instead of locking it down, it'll come all the way back to break even or even a loss. It's like, so it's a hard thing to adjust to, when you're trading, is being able to scale out, lock in some profit. One nice thing I do like on the X platform too, especially when you're trading combines, never let this green trade go red. And it's hard, like in this example, because honestly, I wouldn't go long here. I would have more likely, taken a short somewhere off of here. But in this case here on the X platform, I went long with 10 contracts here. You get a push up. You come over here and you can just smack this BE. And that'll instantly put your stop at break even. So worst case scenario, the trade is flat. So it'll probably come down here and stop it out. But if you're trading combines, like I said, I size in
Order
with
filled.
typically, like I'll start a position with 1. Unless I see a great setup happening, I'm going to grab it with like 2 or 3, grab my 20 or 30 points, hit that 1,500 and be done. But most cases, I will start the trade with just 1 contract. And if it appears I'm getting my continuation, for what I was looking for, I'll be up $500-$600. But if I only need, if I'm looking to get up to, like, let's say a level here, but I'm very confident we're going to push to this level and I'm still down here and I'm up $500 or $600, I will just size in real quick and I will grab 1 or 2 more full size contracts And that way, instead of me anticipating it getting up to here, like if I'm looking for a level of liquidity that I'm looking to, bump up to, if I'm very confident in the setup, I will grab 2 or 3 more full size and just, instead of waiting for it all the way up here to hit my take profit, it hits it like down here. So I just need to grab another 10 points, quick candle, go up there, grab it. I will do that a lot because I have found that if I'm just holding one contract and I want to get all the way up to here, I will get that candle, will just get right up to the very tippy top, and even to the tick will not fill the order and come all the way back down. So it's like that's just the different approach I take to aggressively trading combines is, they're just in my way, but I want to effectively get them passed and get to a funded state instead of having to, take a million different trades and scalps trying to get up to that point. So I'll wait for a really good setup and then I'll take it. But as you can see here, we're getting this push above the 200 and VWAP. Let me come back to my... So this is where having my map, besides just the indicators on the chart, has critical levels put on here. So this spot right here was the previous week low. We had this push right above, the fact that VWAP and the 200 are touching at the same time, and we push through. Again, if you were short here, I'd have a tight stop, right above that candle, 5-10 points. Because I've been pretty confident once we blew through both of those that a sell was no longer on the table. So a better setup on this would have been, we got this little wedge formation. We had the break out of the wedge. So if you were down here somewhere with a buy, anticipating a breakout, knowing that your stop would have been somewhere down here, this would have been the perfect entry somewhere down here around 665. You'd have grabbed that with one full size contract. You're just kind of watching the levels. We broke through this 100, came up here to push VWAP. I mean, now we got some serious volume stepping in, and we're obviously looking to, we're pushing through the high of the session, just setting new highs as it pushes up. But a setup like this, at 65 level, I mean, you're already up 50 points now. What did it hit? 715 roughly. I mean, 50 points, if you're doing a full size contract, that's $1,000. You got to make $1,500, in the first day. But again, if I seen that push up and I was in one contract down here and I was getting this push up towards the VWAP for 200, chances are on the break, I'm grabbing 2 contracts and probably going to hit my 1,500 before I even get up to here. That's how I would trade combines. You had an obvious hard, 2 hard buy candles here, these white ones here. Volume stepped in, you get that momentum. Yeah, just a kind of a solid setup, especially since it got to the 200 and the VWAP at the same time and it just blew on through. That would have been a perfect trade setup to pass the combine first day. And it got you that 1,000 to 1,500. So now we've basically came back down, tested VWAP in the 200. If you were looking for an entry to go long, it definitely would have been a good spot to go long, unless you just place a stop somewhere below. But given the last few nights of trading that I've seen, we've had these big sell-offs, and they get bought right back up. So this candle here, as we are progressing up to the high we just made, chances are we are looking to hit this daily open, or this pink line, that's the close from the session. Right at 4 o'clock. So if we come back here at the end of 359, this candle right here, if you look up on the top left, up in this area right here, when you hover over that candle, it shows where are we at here? It has the close of the candle at 741, but the indicator marks 746. But essentially, this line is the close of the market from the New York close at 4 o'clock. And when the market closes at 4, most prop firms, they're shutting you down about 4:10. If you're trading your personal account, you can trade all the way up until 5 o'clock. That's when the actual market closes. Most prop firms, a lot of them even want you out at 4 o'clock, right at the close. But Top Step I know is 4:10. You know, a lot of the other ones are, 10 minutes after. Some firms, if you're in a trade past 4:10 or whatever, even 4 o'clock, they will breach your account and close you out, and you only you'll lose the account. So there's tons of prop firms out there. Disable extension. All right, trying to figure this out. All right. So I know I'll be able to go through and we'll get this bit rate figured out and stuff, so it's not so grainy or delayed. I mean, I know the delay right now, probably on what you're seeing actually on YouTube, is probably a bit behind, because you can see the clock down on the bottom right here. But we'll get that worked out. But yeah, if you're new to trading, you're going to find out that the key to success, there's a million ways to find a profitable trade. I mean, hey, you couldn't even know how to read a chart and just play the 50-50 game, throw buy or a sell, in hopes that 50-50 win rate is, you're flipping that coin a little better than, winning than losing, and make a profitable trade. There's a million different trend lines and strategies. You can go down the ICT wormhole of, only trading when this fair value gap presents an opportunity. The problem I have with ICT and like fair value gaps is depending on what time frame you trade on, your fair value gap changes all the time. If you're a 15-minute time frame trader and you're only trading, fair value gaps, and you can have some massive fair value gaps, which essentially are just big, broad areas of liquidity. If you're a 3-minute trader or 5-minute trader, you can draw fair value gaps all over your chart all day long. Yeah, will they come into play at some point? Very well could be. The key is to find something that you can consistently do that helps you navigate the markets to get more wins than losses. Because you can have a million profitable trades during the day. The hardest part people struggle with, I struggle with, is being able to walk away. And a good way to do that is to set some small obtainable goals. Most prop firms, you have to have, top step is $150 a day. Bunch of others, $200 a day. Some of them are down to like $100 a day. The key is to not sit here and play the reverse button. For an example here, we'll go back to X. You can sit here and grab 10 contracts.
Order filled.
And you can sit here on the reverse button and you can just scalp candles.
Order filled.
Reverse. So now we're short. You can make a million different trades a day. Oh,
order filled.
It's going against me. Let's reverse it again. Some days you'll feel like you're doing it. You've taken so many trades that you're hitting that reverse button up and down, up and down, up and down. And I guarantee you are going to lose most of the time. But if you can find a way to take 1 or 2 good solid setups, 2 to 4 micros is kind of where you need to be in today's market, especially during the New York session. The New York session is so violent. If you are on the wrong side of a trade and your stops are not in place, anything more than 2 or 3 micros, you get some big moves. I mean, you're talking 200-point swings in a matter of minutes. This open right here, this candle here, 524 to, it's 100, almost 200 points by the time it was said and done in the course of 15, 20 minutes. If you were short down here, which was not a good indication, especially if you didn't have a solid break and a retest of the 200 or VWAP. Would have been kind of hard if you were expecting maybe a continuation to VWAP for a balance. But again, I treat the 200 more as gold than I do the VWAP. Both of them, arsenals I keep in there, but I try to take most of my trades off that 200. But in the case of here, almost 200 points. If you were short down there at the bottom with just 2 micros, that's still an $800 loss that you're going to have to sit through. Pretty crazy. But if your stops are in place, if if you're trying to make $200 a day and you were short down here at the bottom and you had a $200 stop loss in place, you hit it, the trade didn't work out. I'm not sure where that difference would have been, before you got stopped out, but it's easier to eat that $200 loss down here than to be sitting up here, $800 in drawdown, and you fire up that pipe smoking that hopium, hoping it's going to come back down and get you back to even. And what do you get? You got continuation and a run up to about at this point, then your accounts are completely smoked. And that's the cool thing about prop firms is essentially, they call these 50K accounts, 100K accounts, 150K, and they try to tell us, oh, you're trading with our money. This is just sim funds. This is not real money until you actually get that payout. I placed this order right here on this chart. Even if it was in a sim funded account, this account does not show up in the live markets. You have no bearings on whether the market goes up or down based on your position in your sim funded account. The prop firms have millions of people pay in to the prop firms, and that's where they pay their successful traders, is out of that. Everybody paying for evals and combines and activation fees. That's how they keep the lights on. And a few that have gone under, which were sketchy from the get-go, were basically taking all the people's money and gambling with that on their own end, spending it like they had it constantly. But there's enough reputable prop firms out there that if you worked hard, looking to get your payout, they're going to pay. But if you're focused on, let's say it's $200 a day, and you can do that for a week, turn that into 2 weeks, you're going to have the ability to have consistent days stack up. That is a much greater feeling than getting into that feeling of YOLOing and having these big days, but then turn around and get swallowed just as fast the next day or two later. But if you can consistently show up, find a profitable trade. Like I said, there's millions of ways to find a good setup to be profitable. It is very hard to stay there and not give it all back. And that's the importance of learning lockout features, hit your profit goal, lock out for the day, to prevent you from getting in and over trading. Because everybody has that nature, especially after one or two good trades. You're like, oh, I'm on fire. I'm gonna go to scalp a little more. And the next thing you know, you're just giving back, what you made on the first trade and what you made on the second trade. And now you totally got raked over the coals and you're red on the day. So then your mentality is going to switch. You're going to be like, okay, well, now that I messed that up, how do I get it back? And so you'll end up over trading until you pretty much blow that account. So as a new trader, you're going to find the struggles of having to control your emotions when you're in a trade. And I have found over the years, it's very important to be able to set a simple goal and then walk away. And if you can show up in the markets and consistently do that, there's two ways you're going to become more profitable. One is you are going to either size up. So you're going to take the same consistent trades, but you're going to size up with more contracts to make more money. You're also going to put on more risk. The other great option to do, which futures offers that a lot, is the copy trading. If you're going to bang out that $200 a day consistently, days turn into weeks, you can basically make your income exponentially by spreading out that risk across multiple accounts. You know, let's say you had $10,000 in this one account and you're trying to make $1,000 a day. You know, you're willing to lose $1,000 on a single trade to make $1,000. Whereas you had 5 accounts and you only got to make $200 and you happen to lose $200 on that trade, you've spread that risk out. So now your $2,000 account still has $1,800 in it instead of $1,000 because you've spread that risk out across those accounts. That's the joy of copy trading. The downfalls of copy trading is also you do risk losing all those accounts. But if you're shooting for base hits and you can consistently do that, you're going to become a profitable trader way faster and easier than trying to swing for home runs. And I can tell you from personal experience, some of my most consistent payouts come from when I buckle down on simple goals. I mean, I've had massive days in the market. Those will be stories to come later. And I've had horrendous losses. But I can tell you the most consistent days are, you know, when I set a goal and keep it simple. And that's the awesome thing about X also, that I show new traders. Actually, I can't see it on my screen for some reason. It's cutting off the top of my screen here. Bear with me. There we go. So you can see up here, it's your realized profit and loss. This is your unrealized. This is your open trade. But one of the greatest things on Top Step X, you come over here and you smack this button. It's the lockout feature. Let's say you're in a session, you've taken a couple trades, you've been struggling, you're losing, you got that tilt feeling that's coming on, and nothing's worse than tilt if you're in a bad mood, bad place. Like, even let's say you're coming into your day and you're mentally drained, you're emotionally you're feeling off. That's the worst time to get into the markets. You're not thinking clearly. You're not seeing, your mind's not fresh. Killer feature here is you come over here and you can just smack the all day and yes, lock me out. That'll save your account faster than anything else. Also, if you're in a day where you've taken a few trades, you just don't have a good read on the market, you're just getting chopped up, you don't necessarily want to not trade for the day, but you need a breather. You need the market to, get through this massive choppy area and, find some balance. You can come into the custom settings and you can just lock yourself out for an hour or 2 hours, a certain time window. Some people that can't, that don't trade well during, certain times of the day. The New York Open's a very hard time to trade. Typically, I don't like to trade that. I'm more of a after 10 o'clock, even 10:30 some days. When the market finds that wedge formation that it's looking for, and that's where I like to grab some scalps. That typically happens after like 10:30. Some people don't like that chop. Me, I see that showing up on a chart pattern. I love it. I can grab 2 or 3 really good trades, off of that formation. But to be able to come here to the custom, set a certain time frame, lock yourself out for an hour or two to prevent you from getting caught up in that chop. Again, for new traders, I feel it's a great option. For my other accounts, I've been looking into some other kind of lockout features to use because there's just too many days. I can't tell you how many days I've been up a few $1,000s and I end up red on the day. Being able to use a lockout feature, it's almost refreshing when you do it. Like if I'm in some accounts or something, and as soon as it comes into my mind, like, okay, this is enough profit for the day, I should just lock out. To have the willpower to reach over there and lock those accounts is actually a very good feeling. And that's a nice thing about this ProjectX. And a lot of other prop firms are now using X. And it's still fairly new. I mean, they've had it for like a year now or so, but they're still working out bugs. And they've had glitches and some issues. But for the most part, very user-friendly. Easy to navigate. Great for new traders. Let's see. So in the scenario of this trade tonight, which I'm trying not to take any trades as I'm walking people through just because I'm not as focused right now, but this was a perfect setup. If you didn't catch this push and you've missed it, through this run here, you had the retest. You had the break of the 200 and VWAP, which was a great setup, but you had the break and then the retest back down. An entry right there would have been perfect, knowing that if you had the continuation up, I would be targeting this level right here, the daily open or the close, somewhere in this area. Would have been a great trade. And the key is, once you get funded, you've got lots of opportunities to take trades. Especially starting out, it takes $150 in profit to consider it a green day for Top Step. Now, what you don't want to do, you have to have 5 green days before you can take a payout. If you only shoot for $150 a day, in 5 days, you got $750 in profit. So take your $2,000 in drawdown. So they open up your 50K account. It'll say your balance is at 50,000. It's not. It's at 0, but you can take it down to 48,000 before the account's actually blown. If you were to take $750 in profit in 5 days, and you took a payout, which you only get 50% of that per payout with Top Step. So you've made $750 and you get a payout of $375. Instead of your account being at, the 50,750. So every day your profit goes up, that 2,000 drawdown follows you up as well. So if you're making 150 a day, that 2,000 drawdown stays up until you hit to the $50,000 drawdown mark. So if essentially you make $2,000, then it makes your balance zero, will be when you would lose that account. But in the instance of you doing 150 a day and you go up to 750 and you want to take a payout because you need some money, you're going to pull out $375. And what Top Step is going to do is they're going to bring your drawdown up to $50,100. And you're essentially going to leave yourself with like $200 or 250 or whatever it is in drawdown before you would actually blow the account. So the key is to let your balance grow, get up to that. I mean, even at a $2,000 balance, I would much rather see a $4,000 balance before you take a payout, because that will, again, leave you with $2,000 in drawdown. So if you want to grow your account with longevity, you want to build your balance up before you take that first payout, because, again, they move that loss limit up to $50,100. So in the case of this, if you're shooting for $200 a day, that one account, it's $1,000 a week. You do that 4 weeks in a row, just hitting your $200 a day, is essentially going to get you your $4,000, and you can take a $2,000 payout and still leave $2,000 in the account. If you can show up and do that every day at the $200, there's no reason why you couldn't do that across multiple accounts. And you don't have to tie all your accounts together. Just if you were to get funded with 5, Top Step allows 5, but if you did 5 or 10 accounts, essentially you could just trade 2 at a time, 2, maybe on to 3, but you let that $200 days stack up, and you do that across 5 accounts. That one account that pays $2,000 a month, you've now bumped that up to $10,000 in payouts, just doing $200 a day. Not bad beans for sitting around clicking a mouse on the computer. Now the drawdowns, you have to pay attention. Again, you set your stops in place. You try to make 200. You're willing, if the setup is good. And that's the nice thing about micros. Micros gives you room to breathe. So you're not having to do this all in one trade. If your goal is $200 a day and you're just trading 1 or 2 micros, and it's like a $75 trade, $100 trade, lock in that profit. And I have a bad problem with this. I'll get into a trade and it's like, well, it's going up to this level, so I'm just going to hold it till it gets to that level or close to it. And I will go through and it'll almost touch it, and then it'll come all the way back down, and I'll end up sitting in a trade for 4 hours. And then finally, after the 4th hour, it decides, we've ran out of buying pressure, and then it comes right back down to where I bought it. Don't get into the attitude of see green, take green, but lock in some profit. Your goal is only $200 a day. So if you can consistently do that with micros, you have to set up like your day would be, you take your trades, you're willing to risk $200 to make 200. Let's say you're 2 trades in now and you're down $400. Honestly, that would be a pretty good, if you're only shooting for $200, you could come in here into the X platform. Come over here to your settings. You have a personal daily loss limit. If you're shooting for 200 a day put your personal daily loss limit, even if it's $400. So you take 2 losing trades, you lose $400. It gives you 2 trade opportunities for the day to make it. Or if you lose 200 and you get it back, then you're still at break even. You still look for another trade to hit your 200. But if you put your personal daily loss limit at just $400, even 5, if you do 500, it would take 4 bad losing days before you would blow that funded account. It's very important to preserve capital, because the capital is what keeps you in it. So if you just put your personal daily loss limit, let's just say $500. Make sure you put that setting at liquidate and block. Liquidate is just going to close out your position to save you from losing. But if you're down, and that's the other thing with prop firms, they want you to stack up multiple green days. I've had many an issue with this personally. If I had a DLL in place, I've had $10,000 accounts that essentially I've blown in a day. Whereas if I just would have had a DLL at like $2,000, and if I'd lost $2,000, I could have easily gone back the next day and had a $200 day to add another green day and still, advance to a payout. So that's something personally I have to work on a lot more is the DLL. But in the case of a new trader, you want to stay in the game as long as you can. So like a $400 or $500 personal daily loss limit. If you hit it, it's fine. You're locked out of the accounts for the day. Tomorrow's anew. The market's open, 5 days a week. And that's the great thing about futures. You can trade through the night. There's plenty of opportunity to trade, but it's hard to mentally get over a big loss if you're, in one bad trade, into another bad trade, into another bad trade. Very easy to get that tilt feeling and end up just over trading back and forth over and over and over again. So a personal daily loss limit is going to help keep you in the game. They also have it for enable trailing. So if you're in a trade and it's moving up, it runs that stop loss with you. But the biggest thing is look for good quality setups. And when you hit that $200, you just lock yourself out and you stack those days up. So if you're looking at like a $200 day cap, you'll set your personal daily profit target at like $220 just for slippage and junk that'll hit. But another big thing too, when you're doing the personal daily profit target, I have it on liquidate for doing combines, but if you put it for liquidate and block, it's another big key feature. Lock you out when you hit it. So if you notice on this push up, we came to this green. There's lots of different indicators to put on the chart. If you gum up your chart, it's going to actually make your trading more difficult. For me, it's just, I guess you could say I'm a levels to levels kind of trader, and I like to focus on the best entry possible. So the indicators I have on my chart, come into play every once in a while. In this case here, this green line is actually, so this purple band here, that's the VWAP. And I have a set of just single standard deviation bands, which are these green ones at the top and the bottom of the VWAP. So just imagine it running in a channel. And you can set your deviation bands. Usually it's like 1% or something deviation off of the VWAP. I do like to have them on there because they do come into play. Here's the case. We ran up into that deviation band and sold off. So that'd have been definitely an area if you were long down here to watch that area for a take profit. So in this event, if you're in this trade on your X platform, you can scroll over and make your candles nice and tall. But let's say that you're in this trade and you were in it from down here at the bottom, and you're moving your stops up into place, your take profit, you're getting that next push up. So here, at this height of this candle, if you had got in down here, I wouldn't have moved my stop necessarily until I got a solid break of this candle here, which you got on this candle. You kind of got that push up. At that point, I would take my stop and I would probably bring it down here, somewhere down in this area below the bottom of this candle. So that way you're going to lock in some profit. But you had this push above the high of this candle, and you had a little bit of, some pullback. Definitely not down here, but you had this next big, bullish engulfing candle right here, followed by the rest of these candles. At this point in this trade, if you had your stop right here, grab it with your mouse and just keep sliding it up there. If your TP, your take profit was set up here at the open or somewhere here, if you would have had your stop in place and followed this candle up, worst case scenario, or if you had your stop somewhere in this area, you're just going to lock in that profit and chance of a pullback. If you left your stop all the way down here, you've essentially given up 30 points on that move right there. And it's all on how you manage the trade. But having that standard deviation band that shows up, just an extra, okay, it's out in no man's land. This is my next level is the open. There's the close of the New York session. Could be a good area to have some take profit taken out anyways up there. And you can see here during the earlier parts of the session, came down here, we bounced off that standard deviation band, kind of played with it a couple of different times, some bounces and retests. I don't normally take trades off of that. I will take profits on that, or if one of my other indicators are close to that, hitting that area at the same time, I will enter some trades sometimes off of that too. But depending on your software, like this is TradingView's standard VWAP, you can put up to like 4 or 5 deviation bands, but it gets to be a bit much. Again, I'm not trading to be in a trade all day. I'm just looking for the best entry possible. Again, try to grab my 30, 40 points and get out. And that will become a personal struggle for people who start trading multiple funded accounts, is you don't want to get caught over trading. So if you had 5 accounts and you're trying to get your $200 across 5 accounts with micros singly, you're going to have to just keep looking for more trades, more trades, more trades, and more trades. And what I've found with that is, you'll have 5 accounts and you'll get 3 accounts that'll be green, and then 2 will be red. And then the next day you're going to trade those 5 accounts and you're going to have the 3 you were green or red today, and then the other 2 are green. So it's hard to find consistency if you're over trading. The one and done is king when it comes to stacking up, consistent days. And that's where I do feel copy trading helps. If I'm looking for the best solid setup and I can get it all in one trade, I like that. My problem is definitely, getting to a point where I'm only sizing down to just micros, because sometimes you just get caught in bigger goals and getting too ambitious and trading, too heavy. And yeah, I've had some massive wins, but I've also had massive losses. So the key is to be in the game as long as you can. So another thing I do when I'm trading, I have other screens up, other charts. It is dumb how much most days NVIDIA controls what the market does. It's like, oh, what's NASDAQ? It doesn't matter. What's NVIDIA doing? It's going to tell you if the market's going up or down. But I will watch in the other charts during the day SPX, which is another version of SPY, the S&P 500. I will watch my key levels on SPX, and let's say I'm getting a push up, and NQ, the NASDAQ, and the S&P 500 are, for the most part, following day by day. And you can put a side by side ES and NQ charts. And then, you'll watch ES go up, NQ's going up. But sometimes you'll be in a run up in no man's land on your NASDAQ or your NQ chart. And it's like, well, where are we going to, on this push up? Because my next key level is just, again, too far away. And if I'm watching, so I'll watch SPX and I'll have an ES chart up. But you will see, oh, well, SPX is running up towards their VWAP. And sure enough, if you are watching tick for tick on that trade, anticipate taking profit about there because that's probably going to be where SPX is going to, hit that spot. Market will, consolidate for a little bit. Even though it's out in no man's land with the NASDAQ, it's still going to control what the market's going to do. So I'll have a chart with ES on it, which is the S&P 500. For futures, and then I will have SPX, which is a stock, but ETF. But I will definitely keep an eye on that during the New York session. Here at nighttime, a lot of times the key levels that are set on the NASDAQ chart will get followed through the night if we're getting a big sell-off. And that's another thing at night when I trade. This level right here on this chart, you'll see this was the sell down after market closed here at 4. You had a big sell down right here. A bunch of buyers stepped in and brought it back up. here at 6 o'clock when we opened up, we had this sell down here. Ideally, if I was in this short, I would be looking to get somewhere down to the bottom of these candles. When we had this run back up here to the 200, if I was short here at the 200 and I was getting this push back down and I knew I was coming down to this, once we broke out of this choppy range and we continued down, I mean, it hit it so hard, blew right through this level on down. But again, best entry possible right there off that 200 at the top, 774 all the way down here to the bottom. I mean, it's a 120 point trade. That'd be a banger trade for anybody at any point to catch 120 points, but to do that at the night session, you had just two micros up there, 120 points. It's almost a $500 trade. Problem is, if you do that on a funded account, that's where I would say, back here on the X platform, you're in your settings. It's important to have that personal daily profit target set to lock you out. If you're disciplined enough to know that, okay, like in this trade here, if you were in that trade, you would have hit your 200 somewhere down here. If you were disciplined enough to grab your stop and put it down here to where you were guaranteed $200 in profit on that trade, but you want to let that trade work out, and you got that push down here below this bottom, and then you had this free-for-all, perfectly fine to run that trailing stop down in there, lock in some of that profit. That is definitely going to come down to your personal discipline ability to be like, okay, well, I just banged out $500 on this trade because I didn't have my personal daily profit target in. It was such a great feeling. Am I going to be disciplined enough to get back onto my X platform, hit this dumb lockout button, and lock out the rest of the day? That's just going to come down to a lot of discipline. Handle your own emotions. Be like, hey, I just hit $500 on this trade. I'm the best trader in the world. I'm going to go in for more. You get that bounce back up, next thing you know, you're kind of getting chopped. It happens. So that's where a case where if you weren't worried about hitting the $200 a day, but you were disciplined enough to take in and lock profits, that's just one of those scenarios. For me personally, if your goals are just set simple, $200 a day, you're not going to worry about the trades you could have had, the stuff you could have lost. I play that game all the time where it's the what if games. It's fun. It's like, hey, if I'd have stayed in this trade, I bought it at the lowest point. It never would have got red, and I just could have put my TP at a few $100s. Or my stop, in the worst case scenario, I made a few $100s, and I woke up in the morning and I've literally had counts that I'd been in trades early in the night, and we had a straight run up through the night, and this just in the last couple of weeks. I can show you on the other chart. Maybe it was this one. I'd been in positions where if I just set a reasonable take profit, there was one in particular, and that was 170. We're talking 200 or 300 points overnight of just grinding up, or like in this case, catching that run up. You're up 300 points. But I know the one trade, it was 2 contracts, and if I just would have let it go, it'd have been up $7,000 in the morning. But again, that's the what if game. But if you're in a winning trade and you put your stop in profit, you're going to go into the night and it's like, worst case scenario, I've made $300 and just let the trade play out. Unfortunately, with prop firms, you can't swing trade. You can't hold positions overnight. You have to be out. So the chance of trading into like a news event or an earnings report or something, you know, basically at this 4 o'clock window, you're done. And then you're back in at 6 o'clock. But once you get funded, again, focus, making that few $100s, locking it out, calling it good. If you want to practice more on the day, you can practice all you want on that practice account. The reason for this video, mainly, I mean, I may go back and I'm going to edit a bunch out, but just an overview for kind of setting up the ProjectX platform, indicators I use, kind of explaining my trades. I would say, just because I've been trading for so many years, I don't look for one specific strategy to trade. I am a big pulse market kind of trader. Like any given news event can definitely, you know, rock you, but it's very hard in this current market conditions where we're just new highs to not in the back of your mind have this feeling of like when you're in a trend day up of like, oh, well, you know, tariff talks or a Trump tweet or something ridiculously dumb and simple can wreak havoc and, you know, the market will drop 500 points. So that's always in the back of your mind. If you're in a bullish bias and you're only looking for longs, you know, that's where these indicators kind of help come in. Because again, you're not looking for these big, massive moves in the market. You're just looking for that 20 to 30 points. Get in, get out, make your couple $100 and go on about your day. You know, there's been so many times where, you know, you'll place a trade and you'll get back on the charts later and like, oh, well, you know, this worked out this way or this way, but man, I sure did miss, you know, this big move. If I'd have been in it, you weren't, you know, the moves are going to happen regardless. You're not here for all the moves. You are here for just a small part of the trading day, and you want to get away. You spend too much time in the charts, and this is what happens with overtrading, and that's why I am more of an advocate for the copy trading versus single. Is you're going to end up getting to a point where you're staring at the charts all day. You're looking for setups that aren't going to happen. You're trying to take multiple trades, and you're just going to end up getting screwed in the end. So if you can find that good balance of maybe just copy trading 2 accounts at a time. If you're at 5, you know, copy trade 2, then 1 with Top Step. That's 3 trades a day. You can find 3 good setups a day to make your $150, $200. But the key is put in that daily loss limit to where you're saving those accounts. You're not blowing them all in one day. But yeah. Like I said, I plan on getting this stuff worked out with the kinks with the stream. Try to do some more night sessions. Again, walk you guys through some decent trades, get you passed on some evals, some combines. And just basically help you guys get through the hurdles of, one, having to learn how to do it, and two, kind of handling the emotions involved with getting caught chopped up or something. And that's where the DLL comes in. It's perfect for those that can't control the tilt. You hit that daily loss limit and your account's locked out. There's nothing you can do anyways. It's a red day. You move on. You get slammed in a couple bad trades and you don't have that set in place. It's very easy to go from a down $500 day to just blowing that $2,000, and it's like, yeah, screw it. I'll just do it again later. And you think about the days, of having to pass the combine again, and yeah, you can make it way simpler on just stacking up green days, keeping it simple with micros. So my plan is I'm going to get on during the day. Try to shoot for, 8:30 most mornings. As the channel grows, I like trading, at night some. That 6 to 8 o'clock window, I usually find a great scalp. So I do like that for the most part. But again, if you're just trading 1 or 2 micros, there's plenty of opportunities to grab 20, 30 point moves a couple times a night, make you a couple $100. And it's almost refreshing, for me at least, to make my money on fundeds at night and not even have to worry about the garbage of, the New York session getting wicked out. Yeah, you could potentially make a bunch of money, but you can also just get totally wrecked, on some of this chop. So some people like that because if they make a losing trade, they got plenty of opportunity to make it back on another, big candle move up or down. But for me, it's like, why mess with the headache? If you can keep your market moves a little bit more within reason, not get your face ripped off. Yeah, you may not make as much money as you could potentially make, but again, you need $200 a day. Would you rather put in the pucker factor of having to sit there and be nervous about a trade, or would you, rather wait for a good setup, grab it at night, and not have to stress about having to get it through the New York session? I mean, there's just lots of different ways to trade. And that's the nice thing about futures. You got 23 hours a day to do it. If you like to YOLO and heavy size during the New York session, I've been there, but if you want to stack up green days, why not do it with a little bit less volatility? I feel I get better reads at night, but I'm going to try, it may not be every night, but if I can get on, 2 or 3 nights a week and show some good setups, some trades I'm going to take, if that helps you out, that's what I'm willing to do. Then as the channel grows, again, in the daytime session, try to get on 8:30 in the morning and stream for a few hours and just kind of help navigate the markets, because not everybody's on the same schedule I am. But I think I'm going to wind it down there. It's going on about 10:48 now. So you can go back, watch this video. If you're new to trading, that's kind of what this video is for, is helping some friends and family on just getting set up as we move on and you know, we grow, and, you know, you grow as a trader. You know, I'll show you more options out there. And a lot of times, again, it depends on how much you want to delve into the charts. I mean, you could spend a lifetime, and that's kind of where I came from. I love charting. You know, I love watching the charts. I'm a buyer and seller of candles. But you don't want to become so addicted to it to where it can literally overtake, you know, some mental space. So that's why it's a good balance if you're new to it to ease in, you know, grab a few accounts. Let me help you, you know, try to build these accounts up to get some payouts. And then once you see, you know, that real money, then it feels way different. It shows you the potential of what it can be. But again, you can either size in for bigger wins, or you can just spread that risk out across other accounts. And at the end of the day, it's like you're paying in the $200 or so to trade a funded account, and that $200 can give you $2,000 in drawdown. And that's how you treat it as, is like, hey, it's like a $2,000 cash account. And the end game from the prop space too, also, prop space, you know, the prop firms all have their rules. They've all got, you know, their different nicky knack things you got to pay attention to if you're going to start trading across multiple props. But end game is like, you know, be able to put a few $1,000 in a personal account and using a trade copier, have multiple real brokerages trading real live money, you know, in your personal accounts hooked up to a copy trader. You're doing the exact same thing you're doing on prop firms, you're going to do on your regular accounts. So if you're doing $200 a day and you're pulling in, you know, enough money from the props to where you can fund your own personal accounts, and the next thing you know, in the course of 5-6 months, you know, if you've pulled out $25,000 in profit from prop firms, put $5,000 in 5 different personal accounts and copy trade those, and do the same process you're doing right now with $200 a day across 5 accounts. It's $1,000 a day without any consistency, 50% this, you know, all these rules you got to follow. You bang out $200 a day across 5 accounts is $1,000. And at the end of the night, when contracts settle, you can withdraw that money if you wanted to. Turn that into $200 a day for the week. That's $5,000. Come Friday, pay yourself, take that money out. You know, that's $5,000 in profit off of your $25,000 spread across those 5 accounts. Just doing $200 a day, copy traded. I mean, essentially, you're over $20,000 a month when you do that. It'll take you a little over a month and a half, and you would make back your initial investment. But you've also got to keep in the same parameters as far as the daily loss limit, having that self-control, closing that out, you know, keeping that capital in there to continue to be able to trade the next day. And that's all stuff that you'll just learn down the road. But, you know, that's what everybody's dream is to do, is to stay at home and click the mouse and, you know, get paid. But we'll get all into that at a later time. I think for now I'm going to call it a night. And thanks everybody for tuning in and getting bored. Hope you learned something. But yeah, we'll get back on later and we'll do some more trading. Till then, have a good night.